Hi, this is Andy Filipiuk in Toronto for the week of June the 14th. Earlier this week, we got another hot inflation number out of the U.S. The U.S.-made producer price index came in at 6.6% year over year, which was much higher than expected. Now, there's talk that these inflation numbers aren't as bad because they're coming off of lows primarily due to the shutdown that occurred last spring. However, the inflationary trajectory continues to increase. Now, I saw a very good interview with Paul Tudor Jones, who was talking specifically about this week's Fed's meeting. The Fed will speak Wednesday afternoon and give us an idea of what their plans are, whether they're going to, when they may start to raise rates, but more importantly, when they may start to taper. Now, Tudor Jones says if he sees or hears anything that indicates that the Fed is not concerned about this current 5% headline inflation number, he will move in a big way into the commodity or the inflation trade. And again, this is one of the problems that we talked about is psychological. When inflation gets into the mindset, it can become a psychological event. And he specifically mentioned that if we look at the numbers, he quoted an $88 trillion US sort of investment pool, of which right now 0.75% is invested in commodity indexes, etc. Last time we saw inflation of 3%, the investment world was 1.25% in commodities. So he said if we go back to that 1.25 number, you could see commodity prices double or triple. And this is one of the problems, is that we may now see institutional money coming into the market and driving all things that are tangible higher. I've included an article from Martin Armstrong, just a little blog post, where he says that BlackRock, one of the world's largest ETFs, has bought over 20,000 homes in Florida, anything that's below $500,000. So he indicates that this is showing that money is moving pretty much out of bonds into more tangible assets where you can get an income. So this is why housing prices are possibly still staying up and doing very well, as we're getting new institutional money coming in. Hence this inflation, we may be at the beginning rather than at the end. Thanks for watching.